Well, good afternoon and thanks for tuning in. You're watching Countdown right here on Bloomberg Quint, India's first live digital business streaming news service. Pull up the markets and what they are doing. A bit of a leg up in the last few minutes of trade. I don't think the banks have to do too much with this. It's probably got to do with the commodity names and certain stocks like Lever, etc. Because banks are lying flat. Just before we get to individual names though, I want to see what the broader markets are doing as well and what the market breadth is looking like. So this is what the mid caps and the small caps are doing. Again, trading very close to the high point of the day. And the market breadth should come up on your screen. Should be a firm positive, maybe 2:1 or 3:2 in favor of the advances. I believe that is what the advance decline ratio would be looking like. Yeah, 3:2 in favor of the advances. So no surprise there. Let's bring up the heat map very quickly and show you the flavor. Fair bit of green, not too much of red, and save for one or two banks, I don't think there is too much of disturbance there. You probably attribute the kind of gains that we've made to commodities and HUL and TCS in particular. But I think commodity names right up there. So the likes of Vedanta, Hindalco, Tata Steel, SAIL, and a clutch of those names have done really, really well for themselves. And some extent, the gains coming in from HDFC Bank and a few others. So commodities, by and large, ruling the roost in the large cap end of the market, save for Axis Bank and to an extent SBI. Not enough disappointments as well in the session today. But Parthiv, it's not really about banks. I think commodity stocks, by and large, have done well in the broader markets. IT stocks have done well, and TRACOM continues to rise and shine.
Yeah, that's a story for third day in a row. But let's talk about commodity stocks also that you mentioned. So we have Hindustan Copper and also GMDC. These are some of the commodity stocks, outside the index that have been doing well. Continue to do well, rather, I would say, and the uptrend that we have seen for several months after a pause looks like this is a resumption of a new trend, and we'll talk about GMDC in detail. We'll look at the chart today. Also, some of the PSU names like Dredging Corporation have done well. If you look at just today's movement in Dredging Corp, it has gained by 109 rupees by now. That's the 16%. And mind you, this is off day's high when we are calculating these returns. This stock had breached 800 mark earlier in the day. TRACOM, of course, continues to do well, and then you have JP Group stocks also moving up. Throughout this week, JP Associates, JP Infra, on expectation of some kind of news developments here as well. Real estate is yet another pocket, and look at Unitech. Other than TRACOM, probably this is yet another stock which has been in news, but it hasn't really moved up that way. Although up 12% today as well, and along with Unitech, all the other real estate stocks are doing well in today's trade. HDIL, Kolte Patil, they all have moved up. So these are some of the interesting stocks in mid-cap space that traders are focusing on, Neeraj. Looks pretty interesting the last few minutes of trade, to be honest, because as I said, it's not really banks which are leading this charge upwards. It's a clutch of other names which are doing that. The more liquid universe though, more excited today, and should be more excited during the course of the next 1.5 hours, because we should be hitting those expiry rates very, very soon. But let's talk about that FNO space, and Darshan Johnson to tell us what is the pocket looking like an hour and a half before expiry. Darshan, some bit of pickup, I believe, in volatility and the index levels as well.
Yeah, that is right, but doesn't look like expiry because the markets are absolutely flat. Both the Nifty and the Bank Nifty looking absolutely flat. So the Nifty around the 10,500 mark, it's pretty much hovering around the same level. You can see it's trading at a premium of almost 4 points. Open interest build-up is down by almost 10%, and that's because of the rollovers that are happening. As far as the Nifty Bank is concerned, that is also trading absolutely flat. The last time I checked was absolutely flat. It was up almost 5 points. So nothing much happening on the Nifty or the Bank Nifty. So that's the general trade setup that we are seeing. In and around the 10,500 is where maximum positions are being taken. So 10,500 is where the maximum open interest and both on the call and put side is, and at lower levels put writers are active, and at higher levels call writers are much more active in trade. Now if you're looking at what happened today, it's the bullish trend that we are seeing, that because you're seeing writing at 10,400 and 10,500 and at 10,600. So it will be between the 10,500 and 10,600 mark is where the market expects the expiry to happen. Rollovers at almost 62%, that was there. The Jain rollovers at almost 50%. So that's the rollover scene. As far as some of the, this is the Nifty Bank rollover scene, that's also close to 60%. Individually, a lot of stocks are moving in trade. Now, if you're looking at the open interest gainers, you have Godrej Consumer, MRF, HCL Tech, Ultratech and Apollo Hospitals. These are the counters which have gained the maximum as far as open interest build-up is concerned, and where the open interest is fallen, you've seen counters like Bank of India, Page Industries, Biocon, Castrol and OBC and Oriental OBC. So these are the counters that have seen a shedding of open interest in trade currently. Some of the other counters that need watch today, JP Associates almost 10% on open interest build-up of almost 13%, one of the top buzzers in trade. The entire ADAG package doing well, be it an RCAP or be it a Reliance Infra. All these counters have been buzzing in trade. No doubt RCOM is one of the biggest gainers in trade today. Fortis Healthcare again 5% open interest build-up. So the high beta counters have moved up significantly in trade, and the Nifty has gone nowhere. So it's become a very stock-specific play in today's market.
Thanks, Darshan, for all the details. But most interesting, the October expiry was the highest expiry so far, and that was at around 10,344. So today's expiry is going to be the record. Whether or not we get a level above 10,500, it's different, but yeah, this will be a record.
Well, this should be very, very interesting. Let's wait and watch. Don't expect too much of a dramatic collapse any which ways in the markets, just looking at the scheme of things right now and just looking at what's happening to the external world too. I don't think there is too much disturbance in the rest of the world markets as well, so no causes for concern on that front. However, before we get to talk about the markets, I think the interesting pocket is cement and specific stocks like Star Cement, which jumped intraday as high as 11% and then came off a bit, but still up about 6%. But they touched fresh record highs today. The company's announced that it received about 158 crore rupees towards capital investment subsidy claims from the central government. So this anyways adds a bit to Star Cement. But I think the key question to the management and the CEO Sanjay Kumar Gupta joins us on the phone line is about how business is shaping up per se in the pockets that Star Cement might be operating in, simply because we've seen varied reports of pricing across the country. If Western cement companies have cut prices, the scene in South has looked slightly different the last couple of trading sessions as well. Mr. Gupta, thank you so much for joining in. Before we get to pricing and dispatches, just a quick word on this on this amount that you've received as well. Can you tell us what was this about, and is this the final sum and substance of the money that you will receive, or could there be some more receivables that Star Cement can expect?
See, we had a subsidy outstanding from central government of approximately 800 crores at the beginning of the year. In last 2 quarters, we had received 70 crores. This is the second installment, tranche of 160 crores which we have received. So we have put together, we have already received 230 crores out of 800 crores. The outstanding is 570 crores as of now. We, in the 4th quarter, from January to March, we do expect some more subsidy to come in, about 150 to 200 crore. That will take down to our entire outstanding to 420 crores.
Okay. So quarter 4 is when we can expect a larger sum to come in as well.
Yeah, we are expecting around 150 to 200 crore to come in this quarter, next quarter.
Okay, fair call. Having said that, so that is one about one-offs that could come in. Let's talk about business at hand, Mr. Gupta. How are things looking like? There is this huge outlay that the government has announced towards road construction in the northeastern region. Whether or not, whenever that happens is a separate thing. But that, along with the current infrastructure projects that might be on, how is business shaping up?
On the first half of the current financial year, we had seen the cement demand in Northeast. It was 3 to 4% only as compared to the earlier years. If you see, the demand used to be around 5-6%. That was primarily due to higher rainfall which had happened in this year. But in the second half, we are expecting a good pickup in cement dispatches. We have seen some demand improvement in this quarter. We expect more to happen in quarter 4. Overall, we still expect that the Northeast will continue to grow at around 7-8%.
What has been the trend in your realizations, Mr. Gupta, if you could tell us, over October, November and December?
October, November and December, the prices have been pretty stable in Northeast. And we had seen some dip in quarter 2, but after that, the prices have been pretty stable.
Okay. So, Okay, let's move back to where we started, the news that you have reported today. You said there is a cash flow for sure. Will this reflect in your current quarterly number or in next quarter number when money comes in, or this is already accounted for, but it's only the cash which is coming in?
No, this is the accounting is always done on accrual basis, so it is already accounted for, and this is the money which has come.
Okay, so it's only cash flow. Your results, your quarterly numbers don't really get affected by this development. And how do you plan to utilize this cash?
You see, we have utilized this entire amount towards the repayment of our long-term debt. We had a long-term debt of 425 crores. We have paid 150 crores out of that. So now the long-term debt of the company stands at 275 crores.
Okay, and do you intend to do the same when you get further installments like you mentioned in Q3 and Q4?
Yeah, definitely we intend to prepay more debt. As soon as we receive the next installment of 150-200 crore, we'll utilize it towards the repayment of debt only.
Okay. So in line of all of that you have told us up till now, Mr. Gupta, what do you expect Q3 to be like? And the reason I ask this to you is because that's how I introduced my segment as well. We've heard very varied reports of what different geographies within India are seeing, both in terms of pricing as well as in terms of volume growth. And I believe they go hand in hand, but I might be wrong here. But what is your thoughts on how Q3 might be for you as a company or for the sector at large?
See, I can talk about East as we are primarily present in Eastern market. So we will still, Northeast will continue to grow at that level. I told about it will grow at around 7-8% this fiscal also. Entirely, the second half is always very strong than the first half. And we are seeing certain pickup in the infra demand in Northeast, also in other Eastern markets of Bengal, Bihar and Jharkhand. And prices are, as I said, in Northeast they are stable. In Eastern, the prices have actually taken a bit, they were down a little bit in the month of December because of the year-end pressures for the lot of large players having accounting year ending in December. But normally that's a normal trend, and we expect the prices as far as the Bengal, Bihar and Jharkhand to pick up in quarter 4. So overall, I think in East market should grow at least by 5 to 6%.
If you were to do about 7 or 8%, sir, in FY18 or FY17, on the revenue front, it's an ask of about 1100 crores if my numbers are not wrong. You think that's possible in the second half, 1100 odd crores?
No, and when I say 7-8%, this 7-8% is the overall industry growth. This year, our volumes have been down because as the market is aware of the fact that our transport subsidy is ending in January 2018. We have been rationalizing some of our dispatches to the markets, and because there are certain markets which will not remain remunerative post transport subsidy withdrawals. So after we are realigning our dispatches in those markets. This year we will see an overall volume growth of around 5% for the company. And next year we definitely expect to come back to our original growth rate of around 15%.
Mm-hmm. What kind of capacity utilization level are you operating at right now, and what's the kind of outlook here?
We are currently operating at around 70% of capacity utilization at this point of time.
Okay, Mr. Gupta, we'll leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. That's the view from one of the largest players in Northeastern region. They've gotten a small subsidy. They've used to repay the debt. They'll get another 150 to 200 crores, which will go in the repayment of long-term debt, which brings their long-term debt to really manageable levels. I would reckon probably around 100 crores or thereabouts, which is nothing really, irrespective of the size of the company. However, that's not all. I mean, since we're talking about markets, cement or other sectors notwithstanding, let's talk the market mood and some specifics with Gaurav Mehta from Ambit Capital. He joins us right now on the show. There's so much to talk about as well, and there are some specific points that we'd like to discuss with Gaurav. But Gaurav, let's start with a broad generic view. As we draw to a close. We've been hit by 2 or 3 events. One, this excess borrowing by the government, which in all probability means that we'll have a higher fiscal deficit number in the budget. Crude has gone up, and with the inflation doing what it is doing, I would reckon that rate cuts are out of the window even if we don't have rate hikes. In light of all of this, how are we set up for 2018?
Right. So, to answer your first question, clearly there's been, the borrowing number that's been announced is higher than expectations, and that does raise concerns on fiscal deficit being higher than what was initially projected. But I think, apart from the initial reaction that you've seen in the bond markets and some of it in the currency markets, I think what equity markets will be more interested in is how this money is eventually spent, and, whether it's used for populist dole-out kind of measures or is actually used for something productive in the economy. And if it's the latter, then I don't think that a slight bit of sort of fiscal slippage is something that the markets will be very concerned about. So clearly near term it has come as a shocker, but I think overall if this money is spent judiciously, I do not think that should be a sort of speed breaker for equity markets as such. But that said, overall markets where they are today, they do price in a lot of earnings recovery. Obviously inflation is picking up, but inflation picking up could also be symptomatic of the fact that you would have growth also recovering. So to the extent that inflation is low, benign and slowly rising, but alongside comes also growth, I think equity markets should be all right in that sense, because if the growth does revive, that should mean that earnings recovery also revive. Plus, I think one important event that has happened this month, which a lot of us have not focused on, is the fact that just after the Gujarat elections in that weekend, the GST Council did move to prepone the implementation of e-way bill from 1st April to 1st Feb. So clearly, that will help shore up revenues on the taxation front. But more importantly, greater compliance with GST will mean that for the listed companies, for the organized sector, that shift from unorganized to organized will happen in an accelerated fashion, and that in turn will aid earnings. So net, from an earnings point of view, from an economic growth point of view, a bit of higher fiscal slippage, a bit of sort of higher inflation, I don't think will be that much of a worry at this point in time till it translates into better growth and better earnings, and we are seeing some signs of that happening already. But yes, valuations are where they are, so I think it won't be out of place for markets to consolidate for the next 3-6 months to see tangible signs of an earnings recovery, and as that earnings recovery happens, maybe valuations will look a bit more reasonable, and that's when it might sort of decide on a future course of action, most probably an up move. But next 3-6 months, I would think that the best thing for markets to do would be to consolidate.
Okay, when you say markets will consolidate, probably, what does it mean? Are we at the top of that consolidation range, or are we somewhere at the bottom? What kind of range do you look forward for the markets for the next 3 to 6 months?
So unfortunately, it's not our forte to call, where exactly will the market be over a 3-6 month time period, and whether we are at the upper end of it or not. But the point that I'm trying to make is that from a data point of view, earnings will improve. From a 2 to 3 years point of view, equity is still a good place to be. But valuations obviously are stretched in the absence of that earnings recovery so far. So I think it will be unrealistic to expect a runaway market till the market gets a hang of whether that recovery is actually materializing or not. So I would think that 5-10% here up or down from here is the max that the market should do, unless and until you see something significant from the upcoming earnings season.
But when market is still waiting for earnings to pick up, the very first question that Neeraj asked you about the bond yields, two things happen. A, in any given valuation model, the cost of capital is moving up. Second, at this level of recovery, if borrowing cost goes up for all these listed entities and also for the consumer, I think this could be a big impediment to the growth and therefore earnings revival. And market is not at all worried.
Right. So, I mean, first of all, we'll have to differentiate between what's happening at the short end of the yield curve versus what's happening at the long end of the yield curve. And clearly, over the last 12 months, the kind of moves or the kind of up move that you've seen on yields on the long end, let's say on the 10-year GSEC, has been significantly higher than what you've seen, let's say on a 1 year or 2 year GSEC yield. So from that point of view, what we've seen over the last 2, 3, or in fact last 4 quarters is the fact that the yield curve is actually steepening quite a bit, wherein the near term or the shorter end is not moving to the same extent as the longer end is moving, and that's leading to a steepening of yield curve. In general, basic economics suggests that that a steepening yield curve is typically positive for economic growth. Just on rates themselves, I mean, a lot of these financing companies, NBFCs, sort of corporates, etc., typically operate at that 2-3 year spectrum rather than at the 10, 12, 15 years spectrum. So from that point of view, and again there's a lag with respect to repricing of the existing borrowings. So from that point of view, the kind of moves that we've seen so far, I don't think will be, especially at the shorter end of the yield curve, I don't think have been detrimental enough to negate that effect of repricing of older, higher cost borrowings. The third point that I would want to highlight is that, if you go back and look at the 2003 to 7 episode, which, I think is one of the historic periods of strong equity returns in India, that was a period which was characterized by exactly similar things, wherein global commodities were moving higher, Indian inflation was inching higher, Indian bond yields were inching higher, but to the extent that all of that was accompanied by very strong economic growth, that didn't hamper earnings revival, and that earnings growth still continued to be very strong. So if we are, for whatever reasons entering a period like that, then I don't think that, at these levels, inflation slightly rising or yields slightly rising at the longer end should be that big a worry. Obviously, there will come a point in the cycle where the economy will become overheated, and hence rates will be significantly higher, inflation will be significantly higher. But at this point, it just looks like early days in that economic revival, and it still is not something which should be taken as being too worrisome for equity markets.
Gaurav, what is looking good within the exporting theme? For all these last few days, everybody's talking about the economy facing spaces and how well they could do. The other aspect is what could happen to exporting themes, right? Because if indeed the global growth is looking strong, then almost all kind of exporters, by virtue of simple uptick in capacity utilization, could actually make a much better showing than what they have in the past. What do you think within the exporting theme looks well, if anything fits your bill?
I mean, you're absolutely right, and I'm with you on that point, because I mean, we obviously always discuss and debate about broader market valuations, but clearly within that market there are different pockets which are trading at significant valuation dispersions. So obviously the domestic consumption related stories have been played out quite a bit in terms of their valuation re-rating, yet at the same time several of these export oriented themes are still available at very attractive valuations. And it does look both, leaving apart China because it's sort of going through its own transformation structurally. But if you look at Europe, if you look at US, there is concrete signs of an economic improvement. And with that, exports-oriented themes should do well in our view. And these themes could vary from, so I think metals is the first leg of it, because commodities are moving higher, so the market is playing metals. But I think beyond that, all export-oriented light industrial manufacturing, stuff which is manufactured in India but exported outside, that should do well. Specialty chemicals is a pocket that I think we've discussed in the past as well. I think that's again an export-oriented theme that should do well. That apart, even within your sort of the traditional sort of poster boys of exports, Indian IT and Indian pharma, I think valuations are reasonable, and there are specific pockets, let's say in mid-cap IT, which are actually on the positive side of this entire technological disruption that you're seeing. So A, they are doing the right things in terms of being on the right side of the technological disruption, and B, with the West recovering, I think both cyclical and structural tailwinds should support such companies, and valuations, as we know, are very attractive. Similarly, I think pharma is a space where valuations valuations have reached a level where they are denoting a very high degree of pessimism, and we all know that when things revert to normalcy, you usually see a combination of both earnings revival as well as valuation re-rating. So from that point of view, I think pharma is again at a point where risk return is significantly in its favor. So those would be the pockets to focus on: light industrial, export-oriented manufacturing, specialty chemicals, mid-cap IT, and pockets of pharma.
Wow, and you are amongst the very few people who are now talking about taking a small exposure to export-oriented pharma. Is it valuation that is getting this call in? I mean, the last 2 days of action notwithstanding, the valuation of export-oriented pharma, US exports pharma, is probably at the lowest that we've seen in the last maybe 2 or 3 years, or probably longer.
Right. So you mean your question was specifically on export-oriented themes, but pharma is a sector that in general we like, both domestically focused pharma as well as export-oriented pharma. Specifically talking about export-oriented pharma, yes, clearly valuations are very attractive. Balance sheet health is still very robust, right? So we do see these comparisons with US debt-ridden pharma companies being made on how Indian valuations are still expensive. But the one thing that we do need to keep in mind is that the balance sheet health of Indian pharma is significantly better than some of these debt-ridden US companies. So from that point of view, they have withstood this pressure quite well. Incrementally, if you do see, so obviously, from a channel consolidation point of view, we do see signs that you've reached a point that you cannot consolidate any further in the US. So the pricing erosion that these companies were seeing on their US generics will stay at levels where it was. If anything, it could improve, but it should not deteriorate any further. And two, with respect to clearances from US FDA, you've already seen signs of that pickup. So if more approvals come through and Indian companies are able to push more new products through into the US market, that will more than offset the base price erosion that these companies would incrementally see. And thirdly, a lot of these pharma companies have used this lean phase to streamline their costs. So a lot of these large cap companies, for example, are being more cleverer and more efficient with respect to their R&D spends. And in general, you're seeing a lot of action on the regulatory front, wherein a lot of these guys are engaging with experts on how better equipped they should be to comply to US FDA regulations. So a lot of these pressures have led to remedial action on part of Indian pharma. Valuations are at multi-year lows, and things are looking up in terms of incremental pricing action as well as incremental product approvals. So from that point of view, again, whether it turns over the next 3 months, 6 months, 9 months is a very difficult call to take. But presumably an equity investor should have a 3-year time frame, and on that time frame, I think pharma should be one of the better performing pockets of the Indian market.
Okay, maybe one last question. We talked about rising commodity prices world over, but what it does to the companies like Hindalco, Vedanta, and even steel players like Tata Steel, steel authorities. What do you like in this space?
So I already talked about the themes that we like on the export front. Metals is something which is a bit too cyclical, and at the same time, balance sheets aren't as strong as in some of the other sectors that I talked about. So that's a sector that I generally, we generally refrain from investing into directly. There could be product companies that are supplier to global miners, which are good balance sheet, high cash generation, healthy ROCs. Those are the kind of companies that we would want to play. But unfortunately, because of compliance reasons, I can't get into specific names here. But predominantly, I think this rising commodity theme, one thing that it should also do is to change the nature of leadership within the various sectors in the Indian markets. So you had consumer staples, for example, on one hand, wherein we know that it's a structural story, but the valuations have gone to an extreme at this point. Earnings growth, even the revenue growth themselves are not going to be more than mid-teens. they had all the right things in their favor with respect to margins expansion, thanks to lower commodity prices. Now, if that margin expansion reverses, which you've already seen signs of that happening, then it's difficult to see how these companies, even with a demand revival, be able to post earnings growth which are anything higher than mid-teens. So to that extent, I think at these valuations, consumer staples is a space which might be an adversary of this entire trend. At the same time, as we've already discussed, there are several export-oriented themes which today are trading at trough valuations. And as this sort of economic revival in the Western world does materialize, that's a pocket that should benefit. So you might see that change in leadership with respect to the kind of sectors that have been doing well.
Okay, Gaurav, we'll leave it at that. Thank you so much for taking the time out, and to you and your team, have a great 2018.
Happy New Year to you and your viewers as well. Thank you.
Thanks, Gaurav. Okay, that's Mehta with his thoughts on markets and specific themes as well. But it's 2:30. Just before we get in our experts on board, I think it's time to get in Pradeep to throw a spotlight on GMDC. Pradeep, what's the rationale here? Because I believe it's had a really heady run already.
Yeah, so it moved up for almost 20 months starting February 2016, and after that, if you look at over last 2 months, it has been consolidating. So on this wall, actually, you can only see last 12 months data, but there was a run-up of 10 months more before we went into 2017. So look at this peak towards the end of October, early November, started correcting. And if you look at this, on your screen, you also have 50 and 100 days moving average. So around 100 days moving average, twice it tried to form a bottom or find some support at lower levels at around 155, 156 kind of a range. And if you just look at the movement over last 2 months, what you see is I have drawn two lines here. There is one descending a trend line, and also there is a horizontal line here. Looks like a triangle forming, but if you look at it closely and look at the overall structure, I would rather define it as a flag or rather pennant at higher levels on a longer term chart. So flag and pennant normally we discuss in short term, but this is on a longer term chart. Kind of consolidation was taking place, and now finally it looks like today the stock has moved above the downward sloping trend line after forming a base at lower levels. So it looks like a breakout. Now this breakout is also supported by higher volumes in today's trade. If you look at volumes, they are I would say at least 3 times the average of last 20 days, maybe even higher. Then look at both the oscillators that we have here, stochastic and MACD. MACD has given a buy signal yesterday, and you can see the oscillators are also supporting this move. So how do you really look at it? 20 months of up move, 2 months of consolidation, and once again looks like it's resuming the uptrend. So it's more of a continuation pattern forming at higher level. Stock was moving up, it was going one way, you were looking for an opportunity to buy, and this is probably the opportunity for any such investor or trader to get in.
Wow. Okay, so some chart checks out there. Remember, I think our experts will be best placed to give that recommendation. But from the looks of it, there is a bit of an uptrend that could be in play. Let's ask that to our experts. I don't know if Bala tracks GMDC or no. He definitely tracks the market. We'll talk to him about that. But Jay, since we are on the topic of a particular stock and there is some analysis that has gone into play here, if you look at GMDCA, and if you have looked at GMDC, let me rephrase my question. What do the charts tell you?
Yeah, it's a very good stock. It's uptrending, and it's been moving up from 2016 lows. And I think it's a bit late for an investor to get in here, but definitely there's a trading play here. And it looks like there's an opportunity to make something like 30 to 50% out here. But you need to be careful about your allocation. The risks are a bit elevated, so be careful here. There is a trading play definitely out here, and yeah, it does look like a mini triangle, like what your colleague has pointed out. But be specific about this. Triangles usually occur at the penultimate leg of a move, so be very careful. The market is probably saying this is the last leg of the up move.
Okay, interesting. So we got both the points of views here. Jain, let's shift focus to the markets. A bit of an uptick in the last few minutes of trade. I don't know if these are expiry-related moves. The banks haven't quite done anything. Is there a prediction you have for the next 1 hour? And I'm just pushing you too much, I know. But if you do, then great. And any which ways, how does trade look like from the market's perspective currently?
Yeah, see, when we spoke a few weeks ago, I had said this market's potential were to scale record highs past the 10,490, which was the record high at that point of time. And the price objective was placed at about 10,544 and to 10,770. What the market has done at this point of time it has satisfied the minimum price objective, and from here on, it's a little pushing the luck a little further. It could even go all the way to 10,770 or 10,800, but your risks here are elevated. So what you can actually do at this point of time, you can place your stops at break even for your 10,600 calls, which we had advocated. And if there is any further upsides, you play that. You move your stops to break even at this point of time, or slightly above break even. That way, you play the rest of the upsides if something is left. Otherwise, you stay put with your existing position.
Okay, so that's the call on index. But have you been tracking ADAG stocks? Maybe not Reliance Communication, because that is completely news driven. But the other two, RCap and R Infra, have also done well. Both these stocks are moving up in today's trade. RCap, in fact, is up 11% now at this point of time when we are talking. Any calls on these? Maybe too late to enter, or there is still an opportunity?
Oh, there is definitely still an opportunity. RCOM is definitely not news driven. In fact, when we turned bullish on the overall market on the day RCOM, or in fact the next day after RCOM hit 9.5 or something like that, that's the kind of day when market actually flushes out the most weakest hands on bad news. So in fact, that was the day that marked the low of the stock of RCOM, and it's been doing pretty well from there on. But RCOM has potential to scale somewhere close to 41 to 46, but it definitely is going to give a pullback at this point of time, somewhere close to 26 and 28. You can't say how far down it's going to come down, but if it were to come somewhere close to 28 or 26, it's an ideal entry point for a short-term trading bet to 41. It's very, very likely that RCOM is unlikely to go below the lows it made on the bad news that it made when it was going below 10. That's going to be a very strong low for it. But it's not clear that it's turned around for the long term, but there is definitely a short to medium term play out here.
Okay. Jay, a recommendation at this hour? Before we get to Ruchit as well, if he also joins in, but Jay, one recommendation from your end?
Yeah, I have actually two, but let's revisit what we did last week, because it's very important. I have spoken about agrochemicals and specialty chemicals. Yesterday we saw Daiichi Chemicals hit limit up, and so that sector is going to play out pretty well. And in today's session, UPL is doing pretty well. And there's another sector, which UPL also happens to be our pick for record highs past 950. And there's another sector which is starting to do well, which is pharma. And in this pharma sector, most of it looks like a reflex rally rather than a strong play. But there's one stock that is specifically excluded in this, which is likely to scale record highs if this pharma rally is likely to last a bit longer. Cadila is one of the strongest stocks. We've been advocating this all through 2016 and 17. This is one of the stocks which is clocked record highs to 560, and it has pulled back now. And from this level onwards, it looks like it's a perfect corrective decline, and which it saw from the record highs of 560 odds, and it's come to where it is at this point of time. And it's presenting a low risk entry point, a stop at about 385, and there's a potential for the stock to go past the record highs it clocked around 650. So that's the best bet at this point of time, in my opinion.
Okay, just before we get to Ruchit, Jain, I want to mark that stock, Daiichi Karkaria. I think Daiichi, that's the stock that Jay recommended maybe last week or week before that, and just bring up this month's chart. If you can bring up the chart of the month of December, that's about a 14% uptick, and actually disguised 14%. If you take it from the lows wherein Jay recommended it, I think it's probably given even better returns. So not bad really for a stock which is not all that liquid, doing rather well. Ruchit Jain, technical analyst at Angel Broking, joins us on the show as well. Ruchit, good having you. Thanks so much for joining in. Any trades that you have on any of the key indices for the next, 49 minutes left for this expiry? Couple that up, of course, with your stock trading ideas.
Yeah, good afternoon, Neeraj. Well, probably yes. I think that in this half an hour, we should see some more positive momentum on the index front. The prime reason is that if we see this entire expiry, more concentration during the start of the expiry was placed on 10,000 put option and 10,500 call option. So in the entire series, the 10,500 call option had much of the largest open interest on the derivatives front. Now, what has happened in the last few trading sessions? We have seen addition of some long positions in 10,500 call, and some shorts are still there in the system of the 10,500 call option, which were created before the event, the Gujarat election outcome event. So I think since we are trading higher above the 10,500 mark in last half an hour, we could see some more short covering, which could lead Nifty towards maybe 10,550 to 10,560. So I think if anyone is trading from an intraday perspective, trade with a positive bias, we should see another 30 to 40 points of up move in the Nifty. As far as stock ideas are concerned, I have a couple of trading recommendations, not for intraday, but probably for short term. Maybe one can trade in January futures for next month's expiry. From the mid cap space, one is Dish TV. We have seen a consolidation phase in last couple of weeks time frame, and if we see the daily chart, after a long period of time, first high top high bottom structure is visible in this, and in this consolidation phase, the volumes are also quite higher. So I think Dish TV would do well in near term. One can buy with stop loss below 79.5 for target around 86 to 87. And my second recommendation from the mid cap space is a buy recommendation in Just Dial. Well, probably this is one of the stocks which in last 2 to 3 months has formed a high top high bottom structure. Recently prices have corrected, and in day before yesterday's session the stock has shown an up move backed by very good volumes. So I think prices should see an up move in near term. One can go long from a short term perspective with stop loss below 505 for target around 560.
Okay, so these are the calls from both of our technical experts. Amit Jeswani, founder of Stallion Asset Management, is joining us on the show as well. Amit, I know you barely come out with 1 or 2 recommendations a month, but anything that you have liked recently or recommended, if you could share an idea with us.
So we've not gone lately on anything, but we're still bullish, and it's surprising that we're bullish at these levels. So markets are at 25 PE, FIs are selling, the number of IPOs which are coming are at the highest level since 2007. So why exactly are we bullish at these levels as well? So we'll have to go back a little in history to understand this. FY 2015 was affected due to a drought year and bank NPA problems. So NPA started, like banks started reporting problems. So FY 2015 was affected. So I'll just explain you the last 3 years, the Nifty EPS growth is just 1% CAGR, right? FY 16 was affected by, again, a drought year, as well as steel cycle going so bad that most companies were near bankruptcy. In fact, Vedanta bond yields were at 33%. 2017 was affected by demonetization. Then this year now is affected by GST. So basically, we are at cyclically low earnings and very high valuation parameters. Next year is the year where we all look out for, and if earnings growth returns, we can have a mega year next year as well. So the P's will not sustain at these levels, they'll probably go down, but next year we're getting bullish on the earnings growth. So that's what we're looking for now.
Okay, so you are bullish on earnings. What sectors or stories do you really like in terms of earning expansion next year that you'll focus on?
So we're long. We've just gone long the steel cycle. That trade's working okay. Over long term, we're long financial. For our core long term portfolio, we're long financials, that is 41% weight. We're long infrastructure, that is 30% weight. So we're now playing the capitals, like the earnings recovery cycle. In infrastructure, in financials, we're broadly long NBFCs, but now we have a problem here because there is 16, 17 new banks which are coming, and they will start competing with each other. So you have your AUs, Ujjivans, and all these guys who will gonna get aggressive. You have your PSU banks who are going to get aggressive next year. So PSU banks as a basket might do well, and probably, so we don't trade PSUs, but so there is competition coming in. So we need to review our NBFC portfolio very soon.
Okay. And you talked about the kind of stress that economy has undergone, or the various sectors have really seen. One analyst mentioned this afternoon that there is a new sector in markets called IBC sector. So these are companies that have been under stress, referred to NCLT maybe, or on the verge of it. So one such story that played out well this week was TRACOM. Now market is waiting to see many such more stories unfold. Some traders are already taking position in JP Group. Do you think these stories will have such happy endings as well? Anything that you like, steel sector, power, or even JP infra is yet another sector?
So every bull market is exactly the same. It always starts with high quality, high growth. Then it's high growth, low quality. We are in this stage now. The third stage will be no quality, no growth. That stage is coming. So that stage is about 6 months away. See, the thing is that this year, in the later half, the last 6 months, high quality, high growth has just not performed. You would be underperforming the market. So market looks now with NCLT is the biggest game changer this country has seen. We've seen TRACOM, I don't know from where, they got 45,000. They are now be able to pay 45,000 crores of debt. JSPL, which has got Jindal Steel and Power, who had 40,000 crores of debt. These guys are now starting to pay off their debt because they know that you can't go take money from banks and sit in London anymore. That's not going to happen. The NCLT is there. They're very strong, and they have no problem in auctioning your assets. One more thing, like Bhushan Steel, right? Edelweiss ARC, like Asset Reconstruction Company, is ready to buy the debt at no haircut, right? So basically, with ARCs in play, NCLT, these turnaround stories can create a lot of wealth. We've been playing steel. We've just bought steel a few weeks back, and that trade is already up a lot. They're up 30-40%. It's just the money making was so easy last year that everything did well. High growth, low growth, no quality, high quality, low P, high P. But next year we'll have to be a lot more smarter, and it'll be a more stock pickers market.
Okay. I'm just looking at what stocks are moving around, and while on the large cap space we've discussed how banks have gone off but commodities are doing well. I think a stock that stood out for me today is UPL. I think Jay was referring to some of these themes, but look at United Phosphorus at 766 or 67. It's packing quite a punch and now trading at the high point of the day. Before we get into the small cap idea of the day, Amit, what gives here? Large, mid, small, chemical stroke, specialty chemical stroke, agri-pesticide pocket. It's a wide bucket. Some companies do all, some companies do some. What's happening here, and what are your views on UPL in particular?
So about the chemical play was a great story. We played it via Nosil. We still hold Nosil in our portfolio. The thing is that now the Indian chemical basket is just 4% of global chemical basket. China is 60% of the global chemical basket. So as soon as pollution problems keep increasing in China, you will have a value mitigation. Like, I'll just give you an example of Nosil. Nosil is doing more capacity expansion like in the next 3 years than what it has done in the last 15 years, right? So, and Nosil is a market leader in rubber chemicals. It has 75% market share in India. So these are the kind of trends, and it has longevity for the next 2-3 years till pollution problems are there in China. These guys are not going to correct, and these guys have more longevity. So it has moved up from a commodity cycle to an anti-pollution cycle, and chemicals are here to stay. Agri, we've not looked at it. We've actually exited it long time back, so we've not had a look at it again.
I was reading an article on our website. I'm forgetting what the title of the article was, but it said how one Chinese official said that going slow on the economy is okay as long as the air is cleaner in China. And that just speaks volumes about the seriousness with which they are approaching all of these, and which is why a clutch of these industries for the last 2 years, really, not just right now, the last 2 years, the specialty chemical industry in China has seen massive shutdowns, and which might be aiding some pockets in India and some of the other countries as well, maybe, which are in that basket. So let's wait and watch what happens.
As long as
there.
we are not worried about the pollution.
No, but I did check with a couple of these companies as well, and they said that it's a misnomer to believe that companies that were polluting in China, and because they are shut, we are doing the exact same thing to our environment. Apparently, our environment norms are a lot more stricter than what the Chinese were, at least for the specialty chemical companies. They've had, a couple of companies have had to shut down their plants as well in India too, because of the pollution problems, a river polluting problem, but polluting problems as well. So I think it will be wrong to assume that companies that are polluting the air in China, and if the business shut down and it's come to an Indian company, then Indian company is actually polluting the same way that the company is doing in China. There's a bit of a
If you go to an industrial town like Vapi, which is not far from Bombay, you'll realize, the biggest complaint that industry will make is the number of plants that have been shut down.
But that's not gone up because of China. Vapi's been like that for a while now.
Yeah. So these are the measures that our government
is taking as well
on our own and bring down the pollution levels.
True. Okay. Fair call. But moving on to the buzzing stock of the day, I think without doubt it has to be Dredging Corporation. Nikki Mirchandani is waiting by to tell us what's happening here. Nikki, divestment?
Yeah, so I'm covering the stock which is called Your Fancy. It's almost up by 18.5% and the highest level that we've seen for the stock since Feb 8. And if you look at the entry gains, that's the biggest since a month now. And volumes are also good enough at 25 times your 30-day average volumes. What's the trigger behind it? What Deccan Chronicle says that the union government is expected to hold a pre-bid meeting in New Delhi today. The government is actually looking to exit out of company and it's around 74% stake in the company. It plans to sell its stake at a price of around 17 odd crore and also give away the management control. This price is almost a little lower than a market capitalization of 2,200 crore and a free float way higher than the free float of 572 odd crore. It also seems to be a lucrative deal for the buyer, given that dredging itself cost around 8,000 odd crore. So that could be a good deal, at least for the buyers. That's that in terms of the buzzing stock that we have for the day.
Thanks a lot for that, Nikki. Firstly, Jay, any thoughts here? Then we go to Amit on this too. But Jay, any thoughts here? Dredging Corporation?
No, I haven't had a look at the charts very recently, so I'll give it a pass.
Okay. Ruchit, by any chance, have you looked at Dredging Corporation?
Yeah, so probably the weekly charts are looking attractive, but since the stock is already up 16-17% today, so I won't recommend a fresh entry since the risk-reward ratio won't be that favorable. If anyone is already holding the long positions, then the trend is positive. Keep a trailing stop loss and continue to ride on the long position.
Okay, and Amit, the belief that the government wants to divest and therefore the divestment will happen at a price which is substantially higher than the current market price, some of it might be true as well. But I'm just trying to think of reasons as to why periodically we see a big flare up for a day or two and then a bit of a cool off. Whenever even a repeat announcement of a possibility of a government divestment comes in, this time it seems a lot more serious. The Deccan Chronicle is reporting that the meeting slated for today. But that notwithstanding, we've seen this enough times, right? Even with the repeat announcement of a government divestment, the stock flares up only to cool off in the next week.
I have no problem in buying as soon as I know Dredging Corp or any other government subsidy which government divests entire stake. See, historically, these things have created a lot of wealth, but don't buy it on rumor, buy it on news. I normally don't say that. I normally say buy on rumor, sell it on news. But on these cases, don't buy on the rumor, just buy on when the real thing has happened. I'll just give you an example. Hindustan Zinc was bought at 1,500 crores from the government. Today, the market cap of Hindustan, like this is 15 years back, right? Today, the market cap of Hindustan Zinc is 1.3 lakh crore. The dividend per share, the dividend itself is somewhere around 10-12,000 crores. The whole company was worth 1,500 crores, right? So whenever a private player takes over a government basket, and the Dredging Corp will be a major beneficiary of Sagar Mala, because there are only two companies, I think, Mercator and this one, who can execute the Sagar Mala project. So the opportunity is there, but I don't have a problem paying, you know, let's say $1,000 or $1,100 per share, and then hold it for a very long time if a large company is backing it. But don't buy this on news. That's what I normally would say for this one.
So you know what you were just mentioning, if you look at it, you know, on 1st November the news came for the first time that government is looking to sell the entire 73%. And if you look at the movement on 1st and 2nd November, the stock moved up from around 570, 75 odd levels to hit the upper circuit the very next day. And that was around 800 levels that we had seen.
Do you want to try and explain this on the charts? Maybe the camera can zoom in.
Maybe if possible, because you can see, we've seen the same movement, because you mentioned, you know, similar movements every time the news comes. You can see what happened to it when the news came last time around. It moved up for 2 days, even was locked on the upper circuit. And thereafter, for 2 months, it has been consolidating. So if you bought into it...
You are saying this is where the news came in first?
Yeah, so day 1 and day 2.
Okay.
For 2 days, it moved up, and the highs that we hit on the second day, it never went back to those levels. In fact, it has been coming down. People have been probably selling, you know, getting tired, waiting for the final announcement. And now, after a long drawn consolidation, after 2 months, we have seen this, you know, next leg up.
Yeah. So I think Pradeep is trying to explain this move right here, Pradeep, that
exactly.
The 2 days move, when it went up, then it has come down a bit, and today now we're seeing a bit of a move again upstairs.
So in fact, if you look at the chart, even before the news came, you can see such, you know, 2-3 days movement earlier this year. So even in February, March, when probably government was talking about it, maybe there were some talks of divestment or strategic divestment, we saw such moves. So this stock has this, you know, similar patterns where it moves only for a day or two, and if you buy on those 2 days, you get stuck for a while. So the right strategy probably would be either you buy when there is a confirmed news, or you buy when it kind of cools down, and then you can wait for the next move up.
Just be careful with Dredging Corp or some of the others as well. Anyways, we'll get to know more about it maybe in the outcome of the meeting or otherwise. For now, it's 3 p.m. or thereabouts. Let's get in Yash Upadhyay, who joins in with the Fab 4 list of the day. And Yash, what's made it to your list? Don't tell us it's Dredging Corporation.
Definitely not. But good afternoon to you, Neeraj. And Reliance Communication is topping our Fab 4 list today. And what a run it has been for this stock in this week, gaining more than 100% in just the last 3 trading sessions after the company announced that they will be coming out of the strategic debt restructuring plan with plans to reduce their overall debt to as much as 6,000 crore rupees post the sale of some of its assets. Patil is another name that we are looking at, and the stock had gained close to 7% today after the company said that private equity firm KKR is going to invest close to 200 crore rupees in the company's flagship Pune township. Also, Mahindra CI is buzzing in trade today after Motilal Oswal came out with a note initiating coverage. Now, they have assigned a buy rating to the stock and have set a target price of 297 rupees, which translates into a potential upside of about 19% from its previous day's close. Now, they expect the company's revenues to grow at a compounded annual growth rate of 8% over FY19, while also expecting their margins to expand by almost 260 basis points to 15% over the same period. And lastly, rounding off the Fab 4, we have Quess Corp, and the stock is up about 5% or so after the company said that it has acquired 100% stake in Master Staffing and about 60% in GSF, which is another staffing company, with the option to acquire additional 10% stake in that company for a price of about 5 crore rupees.
Thanks, Yash, for all these details. So these are some of the interesting companies, some interesting stocks that we have been tracking. Amit, any views on Quess Corp?
See, the thing is that whenever these new IPOs, it is very difficult to understand the valuation of these IPOs. You take a D-Mart, a Shankara Buildcon, a Quess Corp, a Dixon, you know, so the valuation of these companies, so this is one thing that we've learned over time, that in a bull market, there is very less float in these new IPOs, and there's a good story. A good story, no float in a bull market works wonderful, and we missed out here, and we will not miss it out in the next bull market for sure.
Quest Corp, Team Lease, and a small cap or a, in the SME exchange. SIS, yes, but there is a SME IPO, I think, ANI, if I'm not wrong. Even that, so all of these staffing companies, in whichever shape or form, have done really well, Pradeep.
Yeah, so that's an interesting segment to watch out for. Well, while it's difficult to explain maybe, fundamentally, Ruchit, have you been looking at the charts? Do you like Quest Corp or any other stock in this space that we talked about?
Probably, if you see the Quest Corp chart, then post-listing, the stock has continuously formed a higher top, higher bottom structure. The volumes are not so regular, but during the consolidation phase in the month of, I think, September, October, no, sorry, not in the summer, in the month of August and September, I think the prices had consolidated very lower volumes, and when the stock had resumed the uptrend during early November, the volumes shot up significantly. So this is a sign that usually in the medium to long term, this is a positive sign for medium to long term. So I think the trend is here to stay positive. Difficult to come out with any target projections in this technically, but if anyone is holding the long positions, I think they should keep a trailing stop loss method and continue to ride this trend.
Okay, so keep trading these stocks on the way up. You can have a trailing stop loss and maintain your position. Jay, since you had a view on TRACOM earlier, some more stocks, I would say low ticket size stocks that people are trying to punt on now. You'll have JP Associates and JP Infra, and then you have these two stocks in infra space, GMR and GVK. Do you see any interesting pattern there? Anything you would like to recommend?
No, I don't like any of these names out here. I see most of them as a trading bet at this point of time, and risks out here are a bit elevated. And one of your Fab 4 stocks that you spoke about was Mahindra CIE. I think who are the brokerage? They've come out with a very conservative price target. It's got much more higher upsides coming through. I'll look at something close to 350 for Mahindra CIE. It's an excellent stock, one of the very good names within the auto space. And so I would say that is my opinion at this point of time.
Yeah, that's Motilal Oswal for you. They came out with the note. About a 19% upside, and that's gotten the stock a bit of a leg up in today's session. Okay, but before we thank Amit Jeswani though, Amit, since we are on the topic of Mahindra CIE, auto components, it's not just Mahindra CIE, right? Last few days or weeks, we've seen Jamna Auto make a dash. Motherson Sumi remains the perennial favorite, not bad at all, and a couple of other small names too have done well. Anything that you like here? Auto component space?
So I'll just tell you, the auto bull market started in 2009, right? Because in the previous bull market between 2003 to 2007, even though Nifty went up 7 times, your auto index went up just 3 times. So Maruti and Mahindra, all those guys underperformed. Now, from 2009, autos have started their own bull market, and because there is longevity of growth, visibility of growth. But the problem is right now, few auto ancillaries trade at 30 PE. And they are in fact trading higher than the valuation of your Hero Honda and your Bajaj Auto. And these guys trade at the Bajaj Auto and Hero Honda trade at 22, 23 times. So in the 9/10th bull run of any cycle, the valuation just go berserk, and that is what is happening in auto ancillary right now. We were there till 2016. We thought that's where it'll top out. We were wrong, but right now we have zero exposure to auto ancillary. It's a very risky. We're in the 10th year of bull market. Price-wise. In fact, auto index has gone up 10 times and has given 26% CAGR returns. So we are too late in the cycle to play auto ancillary again. But these guys can keep moving higher for the next 6-8 months. But we don't have any exposure, and we find auto ancillary as a space extremely expensive. They have no brands. They have lesser margins. We have absolutely no idea why markets are giving them such valuations.
Okay, fair call, Amit. Thanks so much for joining in today and giving us your perspectives. Have a great 2018.
Thank you.
That's an interesting view. I don't know. Do you find enough and more people who find merit in some of these auto components as well? Believe smaller players with growth looking certain for the next 3, 4, 5 years at 20% you might want to buy them. And I think that's what the market seems to be chasing, growth.
So if you are looking at
size doesn't matter.
If you are expecting the economy to pick up, then yes, for sure. But many of these auto component players are also focused more on Europe and US, and because analysts over there feel that they are in the late cycle stage now, So maybe there is some merit in the argument also that these stocks have already seen significant part of the move.
No, sure, there is. But the only question mark that you're going to ask yourself is that while there might be select bunches which might not be great, but a lot of others are exposed to the pieces which will go up and which will take the earnings up higher as well.
And then there is this new story of EVs.
Yeah, but as we just spoke about that day, about 2 and 3 months ago,
yeah,
it's still some time away. By the way, the markets are into negative, marginally so, but have slipped into the negative, Pradeep. So Nifty marginally off, Sensex marginally off as well. So from whatever little highs that we had, we've come off. I don't know if now the VWAP play begins, but this should be very, very interesting. Before we get into our fundamental expert on board, any thoughts here, Ruchit, with the sudden fall that we've seen in the markets?
So probably no. In fact, I was not expecting this in the last half an hour. But 10,500, I think now would play a crucial role. Now the fight is whether it manages to close above 10,500 or below 10,500 because of the open interest that we have seen in this entire series in the 10,500 call option. So I think yes, since it has gone below 10,500, I think more or less we should get closing around these levels only.
Show the Nifty futures right now. Remember, in the morning we were talking about how this 10,500 call option, very, very strong build-up on both the call and the put sides. Should be interesting to see if we indeed come off from those levels as well on a premium of 5 odd points, but 10,489 currently for the current series on the Nifty 50. Jay, any thoughts here on this just sharp move? It's expiry related, I know, but any thoughts nevertheless?
Yeah, see, the market is going to face very strong resistance around that 10,550 mark. We had projected 10,544, 6 points here and there doesn't make a big difference. So it's very understandable for me that it's struggling around this level. But it's very important what it does in the next couple of days. Whether it goes down from here. It's going to be some sort of a reversal or sort of a correction that's coming through. That's going to be very key as to what the market does in terms of price action the next couple of days. So what it does today is not that relevant. In fact, I was very worried that the market made a new high yesterday and then went below the previous day's low. That was very worrying for me. That's not the kind of thing you see in a bull market. You've got to be very careful about it. And we'll slightly take a small tangent and establish 2 points on what we spoke about in the beginning of the show. Auto components, we were talking about excess valuation. There's a reason why markets give excess valuation, and I still like on the auto component space Amara Raja batteries. It's right now trading at about 850, and it's going to we have a price projection of about 1200, and this is the best name within the auto components. And we spoke about Daiichi on the specialty chemical space. If you look at your Bloomberg terminal, there's no brokerage coverage for it, and that's one of the reasons why that's going to go to record highs. When I was covering Philips Carbon Black, it was $90, and there was no coverage, absolutely no brokerage report on it, and it became a 10-bagger. So look out for these names, which don't have coverage, and you are slightly being fading the crowd, and you're trying to be a contrarian.
Okay, that's an interesting filter that Jay Bala is putting out as well. Buy a Bloomberg terminal, look at the coverage, and if there's no coverage, then the stocks have the potency to hit new highs as well. That's an interesting call, Jay. But anyways, we'll leave it at that, Jay. Understand we've run out of time as well. Thanks so much for being with us, and have a great 2018, Jay. Ruchit, stay on, some more chat with you, but let's get in a fundamental voice on the show as well. And in moments from now, we'll also get in, no Navneet today. So we'll not talk about necessarily all the key stocks that move in out of the ban. It's anyways expiry day, so pointless talking about that today. We'll avoid that, but we'll get in Darshan and Yatin after a brief hiatus wherein we haven't had both of them. Both of them will be active today with what their channel checks are suggesting. But for now, let's get in on the voice on the show. Parthiv Shah, Director at TRACOM Stockbrokers, on the show with us. Parthiv, did you manage to tell any of your clients to buy into Reliance Communication?
Thank you, Neeraj. To be honest, not really. I'll tell you the reason why. Because Mr. Anil Ambani, I think few months back, he had done a similar presentation talking about a roadmap about debt reduction, post which I think we didn't hear of any such deal, any such monetization, and the stock even went further down, and it kind of almost tested a single-digit low. Post which I think probably the markets were in the mood to trust him again. And I think once after his presentation, talking about the roadmap, wherein from 45,000 crores, he's talking about reducing the debt levels to around 6,000 crores, talking about a business model which is very similar to what I understand with that of Tata Communication, a more of a high margin, fee-based kind of a business model. All his subscribers are lost. His wireless business is totally off the record. And I think even talking about the real estate land bank, the Dhirubhai Ambani Knowledge City, where at one point in time I had the opportunity to do an internship. I think he's talking about monetizing almost 10,000 crores out there, which is still, I think, a long way. And real estate markets, we know, I think only few pockets are doing well here and there. So I think, again, the assurance about, the deleveraging. And sometimes I wonder that when you're open in the market talking about sale of your assets, and if your assets are so valuable, I think why can't you monetize it faster, and you could have saved a lot of shareholder value. So to be honest, not really buying the idea about the deleveraging. I would rather not mind buying it even higher from here. But once we see the money coming back and the banks being paid off, and the debt level stock, which are currently at around 45,000 crores, going down to even 10,000 crores, and post which, understanding the business model, I think it's a better call to buy there, because in the past also there have been talks about debt cutting and all that, but we know how long it takes at times. So I think I'm not buying the talk, to be very honest, and didn't get a chance to recommend it at lower levels.
Okay, but as the management claims that banks are actually on board and they have agreed, they have accepted these proposals, and therefore the entire process, the CDR process has been completed, the kind of statements that came out. After that, and also looking at the fresh bids that are coming in for some of the other troubled companies like your Bhushan Steel, would you focus on some of these PSU banking names which are, right at the bottom? So today, if you look at it, there is very high volume at the counter of Dena Bank, which has moved up by around 2% with almost 200% jump in volume. You have United Bank of India that again quotes at 18 rupees. It's moving up with very, very high volume, almost 3 to 4 times the 20 days average volume at this counter also. Do you think it's time to really buy one of these companies maybe?
See, Pradeep, when we talk about the PSU banks, I think we have been always very selective in which banks to pick, because I think many of these mid to small cap PSU banks, names like Dena Bank, UCO Bank, I think on the face of it and in terms of the share price, they would look very attractive, and even in terms of the book value. But I think when the adjusted book value, which is the true picture of these banks, I think that comes out, probably we'll end up finding that, with the way the net worth has eroded over the period of time, the adjusted book value would be even higher than some of the private sector peers. So that is the inherent danger that we have. And still, I think there's no clear-cut clarity in terms of what more I think is there left in terms of more slippages, more write-offs. And I think probably, as the government had even hinted in the past, that eventually they might not have so many PSU banks lying there. I think out of the 26, they might have even 10 or 12. So I think that merger and acquisition, I don't really feel that for these small banks, I think the common shareholders will be really benefited. So I think we believe that a company like Bank of Baroda, I think that is extremely well placed. No doubt, I think SBI is also looking good, but I think in terms of the valuations, in terms of the new management strategy for Bank of Baroda, and I think they are really cleaning up their book really fast. And I think probably max to max, we believe that a couple of quarters, they could have some asset related trouble, but post which, I think once everything is improved and when we start seeing better return ratios emerging from Bank of Baroda, this is a bank which is talking the language of a private sector bank, talking about non-interest bearing fee-based income, talking about good advances growth, talking about the right verticals of lending, and I think best lending practices. So that makes us really confident. And I think frankly speaking, it's a huge bank, I think having a huge book, and I think still quoting at less than a price to book, I think in terms of the valuation. So I think Bank of Baroda, for me, I believe over the next 2 to 3 years, this can really outperform in terms of the type of returns it can generate for the shareholders.
So we have been talking about 60, 70, 80% kind of the haircuts, and if TRACOM can be resolved with zero haircut, if Bhushan Steel may also get resolved at very low or zero haircut, then why not look at the stock, PSU Bank trading at 18, 20, 25 rupees. That is what probably traders are thinking of. I don't know how much merit is there in that strategy.
No, and even if there is merit, please look at each bank individually without the ticket size. I mean,
so
that
most
the tick
of
size
these banks
matter.
will have almost 20% kind of NPA, so it's huge.
Yeah.
And that's why they're quoting at the price that they're quoting at.
Yeah, or the price to book that they're quoting at as well. Yeah, fair point. Anyways, good discussion, that one, but we need to move on to what dealing rooms are recommending in the session today. And as I said, after a brief hiatus, we have both Darshan and Yatin back with us together. Gentlemen, good afternoon, both of you. Darshan, let's start off with you. We haven't had you for the last few days.
Yeah. So pharma is something that, again, I've started to hear a lot of murmurs that there is accumulation, and across the board, they believe that pharma could outperform. But one of the counters which dealers have been speaking about is Strides. At lower levels, there is HNI accumulation that is happening in Strides. So Stride is the first counter that dealers are talking about. And some of the mutual funds are active in DV's lab. Even DV's is trading down to flat in today's trade. But, at lower levels, there seems to be interest that's coming back into the pharma sector. So pharma as a space, and L&T is another counter which dealers are talking about. Over the past few days, they have announced a lot of orders that will come in, and over the next, even tomorrow and over the next few days, they expect more orders to come in for L&T. So these are the three counters dealers are speaking about. But Yatin, what are you hearing?
Thanks for that, Darshan. In the healthcare space, again, Fortis, we had also spoken about Fortis yesterday. Today, the stock is up another 2.5%, cooled from the day's high. But dealers are still confident that on the back of domestic fund buying, there could be some positive action as far as Fortis is concerned. The volumes also on the counter quite good, almost 1.6 crore shares traded on the exchanges. DLF is another one wherein dealers are expecting a BTST kind of a trade. Stock is up surprisingly 7.5%. Last time when I checked, it was up almost 4.5–5%. So a good uptick coming in as far as last half an hour of trade is concerned on DLF, and dealers still expect this up move to continue. And finally, watch out for Asian Granito in the mid-cap space. That stock has been hitting fresh highs, and dealers are anticipating that there could be a short-term 10 to 15% upside as far as this stock is concerned.
Okay, watch out for this as well. Thanks a lot for that, Yatin. So those are some interesting names that dealing rooms are recommending in the session today. I can understand pharma. It's been showing a bit of a flare recently. Parthiv, are you recommending any pharma names to your clients, be it US exposed pharma or just the domestic centric pharma names?
Yes, Neeraj, I feel there is a lot of value in this sector, and especially I think nowadays the focus lies in the domestic market, because I think when we talk about huge international markets like US, Europe, Japan, I think the biggest issue that is facing, I think, many of the US centric drug makers is the pricing. Till date, I think there's still not any clarity, because even if they're talking about launching their specialty pipeline come in 2019, where a lot of product and a lot of pipeline fructifies, but still I think because of especially the consolidation of the channel over there, I think a lot of distributors have consolidated out there, and that will really not help the cause in terms of getting a better pricing power. And I think the rate of approval of the US FDA, that has also increased. So the competitive intensity is also going up. So I think it makes very good sense to focus on domestic centric pharmaceutical companies, of which I think if I have to name a few, I think Eris Life makes very good sense. I think if you look at the fundamentals, the return ratios, I think they are one of the best in the industry. And I think they are totally catered to the domestic market, and I think there's a lot of room to grow. And I think the number one bet that I would have for the domestic pharma play would be Alchem Labs. I think again a fantastic story. I think it has done fantastically well ever since it has come out with an IPO. I think if I'm not wrong, the price is almost more than doubled, and I think they also have fantastic products, and I think they are very well accepted, and I think they're still growing the domestic market and trying to look at certain emerging markets. So I think these are the two stocks which I think don't have any pricing pressures coming from the US markets, because they're very much domestic centric, and I think they can really create a lot of value. And if one is betting on the Indian growth story in Indian pharmaceutical industry for the domestic play, I think these two will be the most well positioned in terms of their assets and in terms of their product profile for the Indian markets.
Okay. Ruchit, if you have had a look at SH Kelkar, the stock is up today by 5% with 5 times higher volume compared to last 20 days average. Does your chart tell you anything?
Definitely this stock has seen a good consolidation phase, and within this consolidation phase 305, 310 it now becomes resistance as per a falling trend line resistance. So although today we have seen a good volume, but it would be prudent to see whether the stock managed to cross this resistance of 310. So I won't recommend going long at current levels in this stock, but definitely if it crosses 310, then one can look to enter this time.
Okay, and what about an apt closing strategy, Ruchit, if you had to bet on one stock, BTST or STBT?
I'll recommend BTST itself. Remco Cement is one of the stock which one can be bought at from a BTST perspective. If we see the recent past, then on 19th of December, the stock had given a breakout from a long consolidation phase with very high volumes. Post that, last few trading sessions have been a consolidation phase, and today again the momentum seems to be positive with increasing volumes. So I think one can look to buy this stock from a BTST perspective, keeping a stop loss below 785 and expect target somewhere around 825 to 830 in tomorrow's session.
Couple of other cement companies for different reasons are doing well. So Star Cement, they've gotten that inflow of 135 odd crores, used that to retire debt. You heard the management a bit earlier, up about 5%. Sanghi, continuing from yesterday's gains, so was up about 7% yesterday. The last time I saw Sanghi Cement after their Motilal Oswal note is up in about 141, up another 2% on fairly decent volumes as well. So select cement names seem to be doing okay. Looking at some stocks which have done well, not just today, for the last few days. Varun Beverages, I thought, fit that bill quite well. Ruchit, any thoughts here? Up about 5% today. I think it's gained about 20-25% the last 7 days.
Yes, in fact, this is a resumption of the broader degree uptrend. If you see the positional charts, then since June 2017, the stock had done nothing but just remained sideways. And that too, the sideways movement was on back to the very lower volumes. Now on 22nd of December, the stock gave a gap up opening, and that gap up opening marked the breakout of that entire consolidation phase of about 4 months time. And post that, we have seen a good follow-up buying also in last 3-4 trading sessions. So I think a broader uptrend has been resumed in this stock. I think on the if we come out with the reciprocal retracements, then the target projection somewhere see around 660 to 670 near term. So even at current levels, if one is looking the stock from a short term perspective, one can look to enter this name for targets around 660 to 670.
Parthiv, we have been discussing these chemical stocks, and there are some more names like Finotex Chemical, which has moved up by almost 20% in today's trade. Do you like any story in this space? Because looks like Chinese government continues to crack down on polluting industries, and which means maybe even 2018 will be good for all these Indian players.
Absolutely, Parthiv. I think that's a very right thesis that you're talking about. And I think looking at the way the trends are in terms of the pollution in China, I think it seems that that advantage that many of the Indian companies have been enjoying, I think that will definitely continue. And talking about chemicals, I think we've always preferred names which are more into, I think, making of value-add products, and names which are, I think, are import substitute. I think one company which fits the radar, and that is something which we have even recommended in the past to our clients, is Deepak Nitrate. I think it's a company with fantastic management, and the story that we are betting on is the massive capex that they've done for adding capacities in phenol and acetone. I think these are the import substitutes. They put up almost a 1600 crore plant, and I think the plant has been set up by one of the world's best designers, which is Kellogg's Brown. And I think once that plant is up and running, I think there's a lot of demand for these products, which are used in many of the ancillary industries. And I think once the plant is running, India is a net importer of these two products, and I think they already have the demand in place, so it won't have a long gestation period for the plant to set up and finding customers. So I think that's a story which I believe for Deepak Nitrate, there's a very good potential that over the next 3 years the current top line could double, and I think that doubling of top line also comes with margin accretion. So I think that's going to be very helpful in terms of further re-rating of this stock. So Deepak Nitrate we are very bullish on. Another chemical company which I think I'm liking the fact that they're changing their business model is Tata Chemicals. I think this is a company which is doing all the right things in terms of hiving off the low margin businesses and focusing on higher margin businesses and more of the consumer centric businesses. And I think probably they are even expecting to get a FMCG type of a company valuation. So I think Tata Chemical, very strong balance sheet, still a long way to go for finding the potential. And it also has a foray into the agrochemical space via Raleigh's stake that they own. So I think a lot of value in this company, and I think this, I believe, over the next 3 to 5 years can really be a multi-bagger stock for one's portfolio.
Okay, we'll wait and watch. Thanks for that, Parthiv. Parthiv, so we've asked you a bunch of sectors on our own. If you were to recommend one small cap idea, say sub 1,000 crores market cap, but a safe idea. We're not looking for somebody who is, let's try and look out for somebody who's a risk-averse investor. Is there something that fits the bill?
Neeraj, almost at the fag end of the year, you're asking one of the toughest questions. Yeah. But yes, I think I have something. If I have the liberty to slightly up the market cap to almost 1,300, 1,400 crores, this idea is Tata Sponge. I think the reason why I find it extremely safe is I think this story is going to be extremely well played out. This is a company which is totally debt-free, amazingly well cash rich, and I think if I talk about the cash lying in its books in terms of the market cap, it's almost to the tune of 30 to 40%. So I think that gives me a lot of comfort in terms of very limited downside from here. And the best part is that this company, in terms of manufacturing of sponge iron, I think it's operating at 100% capacity utilization, having a capacity of 390,000 tons. I think it's sourcing the raw material, which is the iron ore, very high grade iron ore from the Tata Steel mines. So good linkages out there. It has even secured coal linkages, and it's also importing some part of its coal. But I remember that the current cost of production for this company is at around 10,000 rupees. The ongoing rate, the realization of sponge iron is almost 20,000 rupees. And even when the sponge iron prices were at 13,000 rupees, I think this company did fantastically well. If I talk of the earning per share, the first half earning per share was around 37 rupees. We are expecting anywhere upwards of 50 rupees of earning per share in the quarter 3, quarter 4. So I believe a very safe idea and can really multiply wealth from here. And also I'm liking the fact that with a very small capital of 15 crores, the management has now started to talk about capex plans. They're talking about a vision of owning or having a greenfield expansion of almost 1.5 million tons of a steel plant. So that can be a massive story, and we know it's a capable management. They know how to allocate the capital well and also have all the resources for the same. So I think Tata Sponge is an idea which I'd like to share to investors for this steel cycle and also for holding on over the next 2 to 3 years.
Okay, so Tata Sponge is the idea coming in from Parthiv Shah today. Well, we are approaching the closing bell now, almost 3:27, 3 minutes to go, and looks like index is moving further down from the 10,500 mark we have been tracking. Let's start the market wrap with Neeraj then.
10,467 is how we wrap up. The Nifty Bank 2 in the last few minutes has come down a little bit. It was flat. And the mid caps and the small caps, I presume, would have just come off a little bit from the levels that they were trading at. So the market breadth would have converged probably to 1:1 or thereabouts. Let's bring up the mid caps and the small caps too. And my guess is that they would have just lost a little bit of sheen. Yeah, they have come off from the levels that they were trading at. The mid cap index is very flat. But the best performers and the worst performers. Starting off with the winners, so Tata Steel, to an extent Dr. Reddy's, HDFC Bank has had some gains, so that's giving that bit of support to the market. And then stocks like ONGC and TCS marginally in the green. But then look at the list of losers. State Bank of India down 2%, Axis Bank is somewhere there too, Hero MotoCorp is down about a couple of percentage points, Bajaj Auto has some weakness too. So autos and banks, rate sensitives by and large have come off, and you wouldn't blame the markets today for punishing some rate sensitives in the session. But broader markets, I'm guessing the market breadth has converged.
Definitely, if you look at it, it's not as bad as the large caps that you see in terms of market breadth. I can find more ideas on the positive side that have been moving up. So let's talk about some of those names. JP Group, you have JP Infra, JP Power and JP Associates. They have remained the star performers for last few days, barring ADAG pack though. And so ADAG should come next on your screen. RCOM. And also RCap, Reliance Capital has regained, most of the losses, I would say, have been recovered over the last 3-4 sessions. So if you look at the stellar run at that counter, there are two interesting mid-cap PSU banks that we talked about earlier in the show as well, United Bank and Dena Bank. Dena Bank had at least double volume, and United Bank, in fact, moved up with 3 to 4 times higher than average volume. So that is interesting. interesting, very high amount of buying emerging at lower levels at these counters. You also had some more PSUs in other sectors, not only banking. So Dredging Corporation was a star performer as the newspaper reports came in that an important meeting is taking place today with regard to its disinvestment. Hindustan Copper also moved up in today's trade with good volume, although the entire metal pack has already run up. So maybe Hind Copper, GMDC and other commodity stocks are kind of trying to catch up. You also had Monet's path moving up from the same steel space, but not for the same reason, because now there are more and more bidders coming in for Monet and Bhushan. So that was the report that came in the morning. You also had some mid-cap names like Philotex Chemical moving up. That was almost at 20% mark when I saw it last. But even in this good market, Balrampur Chini is one stock that declined with good volume. So there was definitely selling pressure at this one counter. There were a few more losers in markets, but volume was more on the buy side. So my list today included more of the stocks that moved up, and there are very few losers.
Yeah, but it's just very interesting. Things under stress seem to be doing really well. Just before I bring up the market close, I want to mark a couple of real estate names. Maybe Pradeep marked them already, but I thought it was very interesting to see what happened to DLF and then a clutch of other names as well. I think real estate by and large had a fairly decent outing in the session today. 6.5% for DLF in trade. That's not a mean feat. And a clutch of other real estate names too did reasonably well. So, and then of course all the stressed names, JP, Unitech, JMR Infra, everything with an infra stroke real estate flavor had a fairly decent outing too. But that's just the nature of the moves that have happened today. On balance, if you bring up the volumes or if you bring up what the contributions are, you will see that banks contributed on the downside. Volumes, well, yeah, you would expect this. The NSE cash volumes fairly high though, I must say. Maybe some bulk deals that have happened too. F&O expiry day, you would probably see these volumes. And the contribution list, you will see financials also help save the likes of HDFC and ICICI Bank, but SBI, HDFC, Kotak Bank, Axis Bank, you see that financials and rate sensitives by and large didn't have the best of days. The auto stocks are missing here, but a couple of auto names too corrected quite strongly in trade today. Hero MotoCorp, for example, down about a couple of percentage points. Bajaj Auto, Eicher Motors, all of them down about 1% apiece. So autos and financials didn't have a good day. There were exceptions, as we said, the likes of HDFC Bank and ICICI Bank, and commodities by and large doing okay. Final thoughts from our experts though. Ruchit, what about, what within the Nifty stood out for you? One is of course the index trade, but if there is a Nifty component trade that really stood out for you on the charts.
So probably Neeraj, if we first analyze the Nifty since last 5-6 trading sessions, what it has done, although markets are trading at its all-time high, but the trading ranges on a daily basis are very small. So this usually happens, in a consolidation phase. So we can say that in spite of market trading on the all-time high, it's more of a consolidation phase in the index and stock-specific momentum which we have been witnessing. Now, if we come on to the sectors first, then in this consolidation phase, what has been outperforming? One is real estate, as you just mentioned about DLF and some other names, mid-cap names specifically such as Sobha and Kolte Patil, and pharmaceutical sector, which since last 2-3 trading sessions have been attracting good volumes. So I would rather prefer, rather than taking a trading bet on the index, which is not showing any directional move or which is not showing a huge momentum on either side. I think one needs to go now stock specific for next few trading sessions, and pharma and real estate names would be the two sectors where one should focus on. Sun Pharma is one of the pharma stock within the index names or large cap names which has given a breakout from a falling trendline resistance, that too coupled with very huge volumes. So I think in case I have to bet one index stock from here on, then that would be Sun Pharma.
Parthiv, how would you advise your clients to approach markets in a new series? Because markets will start factoring in the expectations with budget. You'll also have the earnings season kicking in towards the middle of the month. What's your strategy?
Frankly, I think I'm expecting January to be very volatile. And the reason being, no doubt, I think so far so good. The markets have really shrugged off all the negative news. Generally, I think I'm really surprised at the resilience of the market, even after knowing yesterday's announcement about the government's enhanced borrowing plans and slightly slipping off from the fiscal deficit target. And despite all of that, and the yields today touched almost 7.37%, not boding well for the banking sector and the NBFC sector. But overall, I feel that I think not a bad idea to be slightly cautious, and that is the reason why I think this is an apt market where I think one can really, I think, build a portfolio not around looking at the index or the markets overall, but looking at the sectors that they are betting on. And I think select sectors and select stocks are the key themes which are definitely going to outperform the market. But I think not a bad idea at current levels, and especially in many of the small and mid-cap stocks, if one has a portfolio more centered towards it, we are suggesting clients to book out some profits, say out of 100 rupees, come out at 20 rupees, 30 rupees, stay on cash, because I think pre-budget, then there'll be talks and rumor mongering about the long-term capital gain tax, so on and so forth. So all these things are going to happen and will give fantastic opportunity, because volatility will definitely give very good entry points. So we are suggesting clients to stay on cash at least 20-30% of their portfolio, especially if it's very mid-cap, small-cap oriented, and I think waiting for the opportune time for re-entering into the market.
Okay. Gentlemen, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. We'll slip into a short break at this hour, but come back and talk about a bunch of things, make you hear a slice of the Alpha Moguls conversation as well, and other things. Stay tuned.